Hello, this is another video brought to you by Lake Worth Beach Mortgage. We get the question all the time, what is PMI, private mortgage insurance? All that we can say is that we've been told that we have the best PMI rates in the country. We get negotiated PMI through our favorite lender. Here are some things to remember when you're thinking about private mortgage insurance. PMI is added to any loan over 80% loan to value and is added to every FHA loan. PMI on a conventional Fannie Mae Freddie Mac loan is lower, but the interest rate will be higher depending on credit score. PMI on a FHA loan is higher, but the rate will be lower than a conventional loan. Our favorite lender has negotiated PMI rates which are lower than you would expect. This is an important fact to consider. A conventional loan allows you to remove PMI when the balance of the loan gets to be 80% of the value of the home. With an FHA loan, you have to refinance out of it to get rid of the PMI. Remember that we can help you purchase a home with as little as 3% down for first-time home buyers and 5% down if you've owned a home within the last 3 years. Let's compare the two types of PMI on a $400,000 purchase. 97% financing for a Fannie Mae loan, 96.5% for an FHA loan. Please keep in mind that the FHA loan interest rate is about 0.625 lower than a conventional loan rate right now. In this case, 96.5% financing has a monthly PMI factor of 0.55 and 1.75% is financed on top of the base loan amount. This calculation is the same if the borrower's credit score is 580 or 800. That's 6755 added to the top of the loan, and the monthly factor is 0.55, which ends up to be about 176.92 a month. Now let's look at Fannie Mae. 800 credit score, obviously a very low factor, 0.30, 90 a month. 760, 0.31, 100 a month. 740, 148 a month. 720, 194. So we just passed the FHA threshold with a 720 score. And as you can see, as we keep going, the factors get very expensive. 700 is 229 a month, 680 is 287 a month, all the way down to the lowest score we can handle, 620. And that factor is 1.56 or 504 a month. It certainly makes sense to go FHA if you have a 620 credit score. We're looking at the same deal except 90% financing, and on the FHA side, nothing really changes. The factor is 0.50 for the month, and also 1.75 is financed on top of the loan. This is the same if your score is 580 or 800. The monthly factor ends up being 150 a month. Looking on the Fannie Mae side, this is really interesting. If I'm thinking about doing 80% financing or 90% financing, that additional 10% only costs me $45 a month in PMI. I would much rather keep $40,000 in my pocket. Here you go again, 760, same 45 a month, 740, 63 a month, 720, 78 a month, 700, 99 a month, 680, 135 a month. We're still better than FHA. Finally, at 660, it jumps to 207. And you see the last two scores, they get as high as 237. But still, if you have good credit, look at Fannie Mae and look at PMI. If you're doing 85 or 90% financing, it's so cheap, it's ridiculous. Whenever you're shopping for a mortgage, you always want to look at both options. Usually higher credit score customers lean towards a conventional loan, and lower credit score customers lean towards an FHA loan. We also take into account the debt ratio because an FHA loan can allow for a higher debt ratio. Most condos do not allow FHA loans, so consider that. And we will help you make these choices after we do the math for your specific situation. If you'd like, give us a call at 561-329-0075. Thank you.